Hello accounts people, time to have a look at cash books. So what we have in front of us is a standard 2-column cash book. There are no analysis columns. We'll have a look at analysis one with VAT later. We have a 2-column version. That means it's got cash and bank on both the receipts and the payment side, and we've got both the receipts and the payment side showing. Sometimes they're kept on separate spreadsheets. It's a good idea in terms of job segregation and fraud prevention to stop people having access to both sides. So let's have a look at the transactions then, and then we'll work out what it means in terms of double entries and VAT later. So we started off, we have opening balances. We have £200 in our cash. That can only be on the debit side, it's got to be positive, but bank accounts of course can be overdrawn. This one's £400 overdrawn to start off with. So if you're buying something, it's credit the bank, and it's just goods, so purchases, and we bought them in cash. And then on our number 3, we bought a computer. But that came out of the bank because it's a cheque. Then we got some money coming in, much needed. Cash sales or just sales, and it's a cheque, so it's £600 coming into the bank. Whereas number 5, the next one, is also a cash sale, except that's cash received. Then we've got an item that goes on both sides. We're transferring cash of £200 to the bank, so it's going in the bank, debit the bank, credit cash. Doesn't have any other day books to go in, so we may just put that in a journal as well, or some kind of journal to explain this. Then one of our customers, so we assume it's a credit customer, has paid us £200, so that's a receipt. Sales ledger, so it's Mike, and it's a cheque, so got to be in the bank. And then we're paying our supplier. And we're paying John, one of our purchase ledgers. You quite often get lots of little analysis columns for all sorts of numbers, transaction numbers to make it complicated, but we don't need to put those in at the moment. And it was a cheque for 100. And then we've also bought some stationery, and we paid £48 cash. So it'll balance off as per any T account. The difference is we're balancing cash separately. They're effectively two T accounts joined together. So cash can only be carried down on the credit side. So we've got 192, so £192 worth of cash. Our bank account though can of course be carried down on either side. However, conveniently we've now got money in the bank, albeit only £20. No formula needed for that one, but that's better than having a £400 overdraft. So that is an unanalysed, straightforward, no VAT cash book, just recording in and out, suitable for a very small business, although most businesses would want to start analysing it after a few transactions. So let's have a look at only the credit side now. We'll just analyse the credit side. I'll do these that have dozens of rows wide and dozens of columns wide and hundreds of rows deep by the end of the year, and they get very, very big. So opening balance, well, we're still overdrawn, so that's still there. But now we've got VAT, so we're VAT registered and we've been charged VAT, and we'll have a quick look down here at what the other entries would be. So we're still buying goods for £120 cash on the same transaction, and it's still £120 in the cash column. It's just the analysis that goes different. Split it out, VAT and purchases, and if we wanted to put it into double entry, the purchases is 100, that's the debit entry, and our VAT account, that's still a debit entry, and this was if we need it, because effectively if we're using our cash book as part of our double entry, we've done the credit entry. That was it there, but we'll put it into journal so it balances. Then our computer, would normally put more detail in than this. 400, oops, that's a check. Taking all the totals. That will be £80 VAT, non-current assets, £400. So again, splitting the VAT out. IT equipment or office equipment, whatever the appropriate ledger is, that's the 400, we're taking out the VAT. And this is now bank, of course, 480. There we are. So we've done our double entries: debit the IT equipment, debit VAT, credit the bank, which we've done because this is all credit entries. I'm not going to put the sales in; those will be over the other side. Transfer the cash into the bank. It's just 200. Won't be any other entries, doesn't need analysing. You could possibly put a transfer column in just to help the auditor or somebody add things up at the end of the year, but that entry was over the debit side. It will balance off out of cash into bank. And then we've got our credit supplier to pay, so our purchase ledger, John, it was a check. No VAT analysis because the VAT was analysed when we bought the goods in the purchase daybook. But our stationery, we've just paid it for £48 cash, so splits up office expenses, the obvious one. So having done that, then let's just have a look at the difference. So this one doesn't need the VAT analysing because we're paying into our purchase ledger control account. And one debit and one credit. But that was analysed previously, and whereas this one, the cash purchase, the same as the purchase on the top. Debit station, debit VAT, and it was cash that was credited. So we've analysed items, worked out all the VAT. I made it nice easy amounts as well.